several announcements this weekend from Tesla and Tesla executives Elon Musk and Grace Tao. First, Elon just confirmed he believes Tesla can gain 1,000% in profit growth in the next 5 years. This would be the most compared to other Mag 7 companies. Second, Morgan Stanley's Adam Jonas has reinstated Tesla as their top pick with an $800 bull case target as he sees Tesla transitioning from a pure auto company to a diversified AI and robotics play. Third, Senior Vice President Grace Tao posted saying the Model Y is the best-selling car in the world last year. They've also started selling the regular Model Y in China with up to a 10-week delivery wait time. There's a lot of confusion between lead times and demand. Jeff Lutz is here with us today to explain. A new report says China will sell more electric vehicles than gas cars this year. Fourth, new Model Y deliveries in the US have officially begun. And finally, Tesla has now secured the first showroom in India. So Jeff Lutz is with us. He's a multi-decade supply chain executive and chief quality officer. He's now CEO of his own high-tech manufacturing consulting firm. Welcome, Jeff.
Hey, we're a lot going on. Macro, Tesla, tech, FSD, product transitions. There's just a lot to unpack. So, let's go through it.
A lot of confusion, but we love it when you actually hear directly from Tesla executives and see what they're saying. So this weekend, here's Elon again talking about what he thinks is going to happen in the future. John Ehrlichman posted this: expected profit growth in the next 5 years. You got Tesla at the number one here, 258% growth. NVIDIA, 193, Amazon, Netflix, Microsoft, Apple, only at 45% growth in the next 5 years. This is based on analyst estimates. And I believe that he took the mid kind of moderate view of it. Obviously, there's some bulls and there's some bears, but he took the moderate view. And he said, at least 10 analysts estimate Tesla revenue will top $240 billion by 2029. That would be roughly 145% growth in sales from 2024. That's an average of their estimates. Some see higher sales. Well, Elon replied saying it will require outstanding execution, but I think more like 1,000% gain for Tesla in 5 years is possible. And Brian Wang, for example, was calculating 10 times profits should see higher margin, faster growth rate, higher PE multiple. So he thinks, if that happens, it's a 20x or 30x share price in 5 years for Tesla. Is Elon being just, bombastic and overly optimistic?
It's interesting. Elon shares both ends of the spectrum. If you remember a couple of years ago, he said, hey, look, the next couple of years, I think this was in late 22 or early 23, he said, hey, the next, there's going to be some difficult times, but, we're in a good position. We'll pull through it. But he was noticeably somber on the earnings calls, and he laid it out. He said, look, the next 18 months, I think there's potentially a recession coming, a number of things. And he was basically signaling where he sees the company going. So he does signal on both ends of the spectrum. Is he overly optimistic with his projects and some of these huge undertakings? Of course. But I think it's fair to say, though, that he does signal in terms of the growth of the company on both sides of the equation. And it's also fair to say that he has access to information about what he's building and the potential of what he's building and the capability of his team that these analysts don't have. This is where the quote unquote Bloomberg terminal will fail people. It's decent, inside of 3 to 6 months in terms of understanding earnings power, revenue, gross, it's those kind of things. What it's not good for is these multi-year views. And this isn't a lot of time. This is within 5 years. That'll go by and pretty quickly. So I think my message is he messages both ends of the spectrum. He's known for being overly optimistic, but he's also he's messaged both sides. And this one, there's 2 or 3 major product transitions occurring in this company with vehicle autonomy, with humanoids, and with some form of merger of, XAI, not say merger of XAI, but that content on the Tesla products. And I think he's factoring all of that in terms of this 10x growth.
Yeah, I like the way you said that, right? So the short term, long term. And yes, he is very, very optimistic. But if we did not have our own kind of forecast that could actually say, if things go out well, it could actually do that. It is even a possibility. So that's one thing it's actually a possibility. So, and we're not the only ones. You've got Morgan Stanley now and other institutional analysts coming out, and they're becoming much more bullish over time as we get closer and closer to robotaxi and bots. So Morgan Stanley just yesterday reinstated Tesla as a top pick with nearly 50% upside to its target. Now, they did this because of actually the fall in its stock. That's one of the reasons. But they also did it because they're seeing Tesla as transitioning from an auto pure play to a highly diversified play on AI and robotics. This is the words we've been saying for a while now,
Yep.
but now we're seeing institutions say this. So they say that the total addressable market to expand significantly as AI moves from digital to the physical realm, broader domains beyond just autonomous vehicles. And one of the key drivers is the human or robots. So it's funny that their $800 bull case does not actually have the humanoid robot forecast in it yet, but they're thinking about it, they're estimating it, and what they say is that every 1% of US labor force that can be captured by Tesla Optimus, that's going to be $100 per Tesla share. So that's their estimate. And they see growing investor attention in this segment. So at some point, the potential for human or robots, it's going to become a larger opportunity than autonomous, and that's going to start contributing to the stock. Even they have not yet, but they've reiterated their $800 bull case target for Tesla. What's your thoughts about Morgan Stanley's opinion here?
Yeah, it's typically 6 to 12 month time horizon for them to do that. Yeah, so obviously it's a wide range, but they see the stock going higher, and this is where the conversation it gets really interesting on the company. It's when it's going through these major inflection points and transitions, and what you'll have in the media and what you'll have on social media with X, and then if you look at the array or spectrum of analysts, is you'll have this concentrated conversation about the here and now, like how many insurance, how many cars were insured in China this way. You'll have that conversation going, and you'll have a high frequency of that conversation. And what you'll have kind of a less frequent conversation are around these transitions. You'll hear the major announcements, a permit here, you'll hear some of these major announcements, but the high frequency conversation still presides with where a majority of the sales are coming from today. And what, like you correctly pointed out, Herbert, what we've been talking about in this channel is, and this has happened actually now for almost the last year, as Tesla's earnings have become highly diversified already. You're already seeing these big quarters with FSD recognition, these big quarters where they've drove the capitulation of other competitors in terms of getting EVs out there. They have to end up going and buying regulatory credits, and they've drove that capitulation by bringing their cost structure down and be able to sell vehicles profitably where others cannot compete. And so again, you're going to see this high frequency of conversation. You're going to see this intense focus on Q1, this intense, unbelievable focus on Q1. But in reality, we're literally 90 days away, from this point in Q1 of them deploying their first driverless vehicles on the road, unsupervised. And like I've said on this show and maybe some others, that could be plus or minus a couple of months when you're dealing with new technology like this. There's going to be, as you're coming in for a landing, there's going to be more variation versus you're refreshing a product, or you're just doing a hardware launch of a particular product. When you're doing something brand new like this, there could be some amount of variation. And yes, there could be some reaction from markets from doing that. But in general, people see it's getting closer by just using the product. They see the videos online, but then they can also use the product themselves or with a friend. So in short, I think what Morgan Stanley, I think Stifel reiterated this morning as well, over $400, is just a base case for them, over the next year. So they're all seeing this transition, and they're all going to get in this mode. They're all going to get onto that horse, and they're going to start riding the horse of, this is not just a company that bends metal and ships EVs. This is a company now that's shipping driverless software that enables your car to drive itself, and software that enables it to have its own robotaxi network and simulate or basically take market away from another company like Uber and Lyft. So that's we're in this transition. We're gonna have another transition with humanoids, and I think there's another transition that's going to occur inside of there with just more of the XAI technology amplifying the performance of Tesla vehicles and Tesla bots in a way that other companies cannot.
So, Jeff, I think you need to explain, please explain to us. There's so much confusion going on right now, right? Between, obviously, you've been warning everybody about the Q1 fall because we're in a transition of cars between the old Model Y, the new Model Y. But there's a confusion about, the lead times that you're seeing, the delivery dates and demand. And so let me explain a few things that you brought up, and then you explain that to us because, again, the confusion is just skyrocketing out there, and we need a little bit more understanding what actually is happening. So first of all, Grace Tao, Tesla China's vice president, she posted this yesterday. Model Y has once again claimed the title of the world's best-selling passenger car for 2024. The only vehicle that can surpass the Model Y is the refresh Model Y. Test drives are now open nationwide. So it's looking like that the new refresh Model Y is a major hit in China. This is what she posted just yesterday. This is the chart that she added to that, showing that the Model Y was the best-selling car in the world, even beating Toyota Corolla, Toyota RAV4, Ford F-Series. It's the Model Y. That's the old Model Y. Now, the other thing that they did in China was they started selling the regular Model Ys with up to a 10-week delivery wait time. And this is priced the same as the launch series, which is no longer going to be made available. Now it's the new regular Model Y. So they've switched
regular
from launch
new Model
to regular,
Y,
the regular new Model Y. And so there's two variants, right? They began it with two variants. The launch series started delivery, and then the current wait times for all three variants is 1 to 3 weeks, the same as before. And then here we go. So you posted a couple things, right? Number one, and I'm not going to read this, but I'll flash it here for people to pause it, but you'll explain it. Supply Chain 201. Thank you. When we see a handover, a launch date, the date people pick up the first production units for a new vehicle model or a new phone, right? Just any kind of new product, especially a refresh model, that date is set by the amount of inventory the company was able to build before the launch into stock that aligns with the service level of lead times they target. Well, you can explain all this. So there's that. And then you're explaining that in Model Y in China, there's lead times and there's demand, there's confusion. Tell us what's going on here.
Yeah, both of them go together. If you put the last post up, Herbert, that was up there, the Supply Chain 201.
Okay.
I think it's helpful to separate these two of the lead time you see on the website and demand. So this is what companies do. And I'll explain what I think is happening. I think it's highly accurate. I have no inside information inside of Tesla, but quite honestly, you'll find it to be very rational and it makes sense after I explain it. So number one, I didn't put in this post, but why do they do a launch series? One of the reasons they do a launch series is they use a very high margin. Tesla has the ability to do this because they sell software and they sell hardware, but they bundle a very high margin model together, and they first off, that gives them the top of the elasticity of their demand views. Like they're not going to sell a version of the Model Y greater than this. So what's the demand for this? And it sets a marker for that right away. They see the demand, they understand it, and then they understand how much they really need to build out the rest of the remaining capacity. This is kind of complex because there's existing CapEx there, but just how much to convert, how much labor to bring in. So that launch edition helps them with a couple things. One, it helps set the top of that curve from a demand perspective, from an elasticity perspective, because they can do some math for as they bring the price down, what demand will be. And then it's a very high gross margin SKU. So as they're bringing up their lines, they're going to be at lower velocity through the lines, which means they're going to be underutilized as they're doing the line transition, which means there's going to be higher fixed cost absorption. So those builds are actually going to cost more to make, sell that model for more, bundle it with high gross margin software, and then you actually dampen the transition costs.
Mm.
Many companies, when they do these new product transitions or refresh, they take a huge hit on gross margins. That's one of the reasons that Tesla was able to make the Cybertruck in about 3 quarters, and that's not a refresh product; it's a brand new product, but get it to profitability in 3 quarters is on the back of that Foundation Series approach. But now let's get into lead times versus demand. So people pulled up the website in China, and Tesla sells two main versions in China. They sell a rear-wheel drive version, lower cost, and they sell the long-range all-wheel drive. And it's most of their sales, 85, 90% or more are the rear-wheel drive, lower-cost version. And then you've got the long range. So they saw the 2 to 4 weeks lead time for the rear-wheel drive version, the cheaper version. They saw the 6 to 10 weeks. So you saw posts of like Tesla has up to 10 weeks lead time already. And then you saw a bunch of people appropriately jump on that and say, hey, well, wait a minute, this is more of probably a production queuing thing, which is true. Although it could kind of go either way, but in general, they just don't build as many of the higher cost SKU as they do the lower cost SKU. So setting that that number, that lead time is not out of this world. But then they saw the 2 to 4 weeks on the rear-wheel drive, the high volume one. So, well, what's going on? I thought there was all these orders for the product. What happened? Why can you get one in 2 to 4 weeks? Why isn't it 10 weeks or 20 weeks? You see these companies that are announcing their products. Oh, we sold out in this many. Okay, for a company like Tesla or a company like Apple or a company, these big, that is failure. These companies like Apple and Tesla, they have very experienced, high caliber supply chain planning teams and supply chain teams, execution teams. And it's failure for them to launch a product and to have massive wait times. Now you say, well, what happened with Cybertruck? Why did that happen? It's different. This is a refresh. This is their bread and butter. This is just a transition from one model to the other. This is not a brand new product, brand new category with 100 different things that are brand new. The Cybertruck, I believe they just had to get going and get it into production. It is almost backed into it. But on this 2 to 4 weeks of lead time, what people need to understand is you can't take the 2 to 4 weeks of lead time, go look at production capacity, and make some sort of conclusion of, well, this is all that people want, because they've been pre-building this new Model Y, I think, since November. And so on a new product launch, there's this whole period of time where they start at lower speeds and you ramp up through the process. And they've been building this product for 3 months. So nobody outside of Tesla knows how many Model Ys in China were built and sitting in inventory. Okay, it's some number greater than zero. It's not zero. You can't look at the 2 to 4 weeks of lead time and say, well, oh, if they're doing 2K, then this is all the demand for Model Y. You can't do that. That's the other extreme. So they have a beginning on hand inventory. It's a pre-build for a ramp. Okay, and that's what companies do. And then they set the launch date, the handover date, those first units. They set the date to the point where they have enough in inventory to meet the service level, the 2 to 4 week service level. That's what they want. So Tesla could have had this handover event 3 weeks earlier, maybe right after Chinese New Year, if they wanted. But then the lead times would have been 6 weeks or 8 weeks or 10 weeks. And people know from the studies of buying things like new vehicles, people, when they go into the store, they essentially want the whole process done either the same day or within like a 3-day window. They certainly don't want to have to put an order in and be waiting weeks and weeks and weeks and weeks. So that's the thing. That's the key takeaway people should have is they wait to have the handover event and they wait to say that the product's available for sale when they hit the inventory that meets their service level requirements of the 2 to 4 weeks where they want everybody to be able to get a car if they want a car. So people should understand that. And the same thing in the U.S., this date, this March, I think it's March 8th, the handover date in the U.S., same thing. They've been pre-building in Fremont. They've been pre-building in Austin, and they set that date. They could have They could have had it 3, 4, 5 weeks ago if they wanted to have a hand. They have 20 cars they can hand over if they want. But that's not what they're trying to do. What they're trying to do is trying to have that handover date and saying we're open for business when they can hit the nominal service levels from the product they're replacing. So the old Model Y, you can get an old Model Y in 2 to 4 weeks. You should be able to get a new one. There shouldn't be some extension in lead times. So anyway, I just wanted to clear that up for people. They're they're similar price points. Everything's that's how these launches are planned. This is how they're planned. So it's going to be interesting to see how many they actually sell through in March. That's what's going to be interesting. And then just to be, if you want to be, you can be critical. And the thing you can be critical of is, and I'm sure if you ask anybody inside of Tesla, is while they announced it all basically within a week or two of each other, they're not, you'd want to take that time from when they announced it in January to the time they're having the handover event, and you'd want to crunch that in. That's what you'd want to do. So you'd want to be ramping sooner in Q4, and you'd want to be bringing things up a little bit fast. And I'm sure they'll want to get faster. They got faster from the 3 refresh to the Y, and they'll want to get faster again. The final thing people should understand is some of this demand will be perishable. Some people needed a car in February and couldn't get one. So some of it's perishable. It doesn't all get made up, but a lot of it will get made up, actually, if they can't deliver them all in March. Because remember, some of these cars can't get to their endpoint in distribution from the launch date to the cutoff for the end of the quarter. Some of them physically can't make it to their point of distribution. So some of that will happen in Q2. Just like we talked about Q1 of last year when we had the Model 3 transition, and we told you you'd lose about 50,000 units based on and we did. You'd lose on the Red Sea attacks on the Model Y. You'd lose on the Berlin power on the Model Y. And sure enough, we got a number that was, 20, 30, 40K lower than analysts thought, and the stock sold off in Q1. But we told you that it would be made up in Q2, and Tesla came on the earnings call and said, yeah, it's going to be made up in Q2, and it was, and then they beat in Q2.
Okay, Jeff, I'm always so impressed that I keep learning it. Despite all these shows we do every week, this is a good one. When there's the difference between a brand new car like a Cybertruck versus this revised models like the new Model Y. You pointed out before, which I thought was great. You said that currently the old Model Y, Tesla was producing 20 to 25,000 vehicles per week.
Per week.
And of course, now China, with the new one, they're at 2,000. That was a rumor a couple of weeks ago, whatever. So it's like they're obviously transitioning, and there's going to be an impact to Q1. And then what you've explained here is just when you see a demand week, it's going to take you 4 weeks before you get a car, 2 weeks before you get a car. It's okay. It's some info, but it's not, there's a lot of things you need to think about. Cars on hand beforehand. So thank you for sharing that info.
If they remember one sentence, the lead time you see at launch is not demand. It's not demand. Thank you. There you go. The product has to get to its peak run rate. Yeah. It's got to get up to its peak level. And then when you see the lead times, well, then you can maybe make some, I've always been critical of this process too, because now you have to factor in inventory levels. And now there's things you have to know that it's a complex. Again, this was in the inside of the company. These things were a little bit difficult to manage, but I applaud the attempts on the outside, but don't sound so certain that you actually know the number down to the day, because you don't. And don't sound certain that you think the demand is high or the demand is low based on looking at the launch, because you don't know. Nobody outside the company knows how many new Model Ys were pre-built. Nobody. Zero. So we'll see what happens. There is going to be an impact from this model. Like I told you, from the time they announced the car to the time they did the handover, that there is, if you accumulate that time and you apply it to each factory, we may have 3 to 4 weeks. I'm estimating at least. Tesla does this. It's very clean math. We do this inside the company all the time. You take the peak week of production and you say, how long is my transition time going to be? And you basically, it's a sum of all your different factories, all the different downtimes, and you basically got to cut it. You can't. It's not calculus. It's more algebra. Okay. And it's more basic math than it is calculus. We're not trying to calculate the area under the curve. We're basically trying to say, look, we don't have any material coming in this factory. We're shut the lines down. We're bringing it up at this time. It's going to go at this rate. This factory is going to lose a week and a half. This factory is going to lose it. And then you get the whole sum and the view together. I think this is going to be 4 weeks based on the way it looks right now. We'll see. I don't know the pre-built
Of
quantities
lost
either.
sales. Yeah, so maybe Q1 is going to be terrible. Okay. Wow, Jeff, that was supply chain 201, but it was important. It was needed. There was just tremendous amount of miscommunication out there, and FUD as certain people and experts just trying to promote. And thank you for sharing that. Tesla themselves said that sometime in the near future, electric vehicles will just be vehicles. And a new data point that's coming out is that this is the year that China is going to sell more electric cars than gas cars. This is in 2025. Sometime here, if that hasn't already happened, S&P Global Mobility projects electric vehicles will make up nearly 30% of China's auto market, surpassing ICE vehicles. And then if you add up the new electric vehicles as well, then that is when it's already over 50%. This is the year that has happened. And this is a confusing chart, but basically, as I looked at it, basically it's the yellow line is the global EV share, global of how electric vehicles, which includes hybrids as well. We're now at around globally, so you can see around here, close to hitting 25%. Okay, but China is in gray. They're already at, I'm sorry, you can't see this, 15% of EV sales. Sorry, don't look at the right. The right is only for the goal. It's here. How many millions of units? Sorry. Yeah, so you can see close to 12 million units being sold already. So this is 2024. This is the year. And then the new Model Y deliveries have officially begun in the US. So that's happening now. People in the US are starting to get their cars. And then we also saw inventory discounts in the US for the old Model Ys. They're trying to finally get that out of the way. It's up to $7,000. They're trying to get it out of there as fast as they can. Combined with the 7,500 Fed EV credit, you can now get a previous generation Model Y, but it's brand new, for $77,000, excluding the gas savings. So that's great.
Yeah, they have to do that because of the length of this window between the announcement and launch. I think was a little bit too long, and there is a bit of Osborning of your current. You got product and channels still. You're gonna have some. It's not zero, and you got to get rid of it. You got to get rid of it. The longer it sticks around, the more of a problem it is. And one more thing I wanted to just quickly comment: the way Tesla did this new Model Y transition. If you look at the styling, if you look at the product, everything's kind of these small cumulative upgrades occurring. So it's like if you love the old Model Y, you're really going to love the new Model Y. They didn't stun anybody in terms of like a massive change. They changed the front, they changed the back, and there's a bunch of great stuff that they've done in the interior. And of course, there's a bunch of cost reductions they've done as well. But they did it in a very responsible way. And I've been a part of these and led these transitions before. When you have a hit on your hand, you don't want to follow it up with something dramatically different. So you people like, oh, they just did this or they just did that with the new Model Y. That's exactly what you want to do, because you had a little bit of an issue, maybe, of it being a little bit in market too long, and so you wanted the refresh, you want the new styling. And it's a nice continuum into what Cybercab is going to look like in terms of styling, but they didn't turn a bunch of people off. Like, so it's subtle, it's substantial, but it's subtle in a way. And for me, if I was an analyst or if I was a supply planner inside of the company looking at this, I'd be like, okay, this thing is, we're going to introduce these new lower cost models, and that's going to have an impact too. But this thing is going to be a hit. It's going to be a winner.
And that's what we're all seeing at this point. It looks like it's going to be a major winner. It's looking fantastic, and so many good new features. Like you said, it's incremental, but so many of them. I mean, they've improved everything. The other big news that happened this weekend is that Tesla has secured a showroom in India. It looks like it's in Mumbai. They've finalized that showroom ahead of India's EV market entry. Looks like that they're actually going to, maybe they're going to start selling cars in India for sure. Whether or not they're going to build a gigafactory there, that's still kind of rumored, but it looks like that that is happening now. So
Yeah,
this,
they got the they got the inbound duty down, and this is
we don't know what it is though, do we, Jeff? We don't know that.
well, we don't know exactly. I mean, yeah, I don't have the document in front of me, but
Yeah.
the conversations. Well, first off, they wouldn't open the market up if it was 100%. If it was
Exactly.
30%, they wouldn't even open the market up if they did that.
Something happened.
So it's something, yeah, it's something significantly lower. And I've set up manufacturing once and then distribution twice in India, and it's very common for this this inbound lane from Europe to flow into India. So they're going to build in Berlin and they're going to export to India, and it's going to be fine. Is it going to be like some massive, like, oh my God, this is India, it's 1.5 billion plus people, and because of the demographics, but it's going to be, it's not going to be an insignificant number. And then from there, you see where it goes. If you've got great product adoption, people love your products, well then, and you get the right kind of concessions from the government, well then you decide to expand. India's got to enable some flexibility here for Tesla. They don't have the upper hand, and they really need to enable some flexibility here. So to me, this is very encouraging news.
I really appreciate this show, Jeff, because obviously we are at a weird time in Tesla. It's a very concerning time, right? Are we seeing massive sales drop off because of Elon, because of Europe? What's going on? The transition, you've tried to explain to everybody to keep an eye and understanding what's happening with the transition from the old Model Y to the new Model Y. You've got, expansion to India. You've got companies like Morgan Stanley, institutionalized, saying, yeah, the car company side of it could be in flux for Q1 for sure. It's going to be a terrible Q1, but keep your eye on pure play auto turning into diversified AI and robotics company. And then you got Elon saying, if you look out far enough, 5 years, it's 1,000% growth. So in my mind, yes, this is a tough next 6 months in auto, but we're making that transition. And if you look out far enough, it's all the lines are still hitting up according to what we want. The big things are happening.
Yeah, I mean, the multiple of the company is dependent on the future execution and of autonomy and bots. And every data point we've seen from Tesla is that they're either solidifying dates or they're pulling them in. They're increasing capability. They're coming down the cost. The details we've heard about the Cybercab are stunning in terms of what they've been able to do from a design perspective and part reduction, and then what they're doing in terms of a construction perspective with this insert molded house. I mean, these are like, this is the real deal. Like, it's one thing to kind of like talk about it and pontificate about it, but this is actually their production plan and it's coming to fruition. So it's very on the further out execution front, it's very encouraging. And I have to say again, these new lower cost vehicles, they told us in plain English what they're doing. They're going to leverage the modules from the Cybercab, which had to ramp earlier anyway. Those are lower cost modules that deliver similar functionality. So as a consumer, you're not going to know if you're driving around in $1,000 motor versus a $1,700 motor. You're not going to know that. But they're going to put those in. They're going to put the lower cost inverters, the battery packs, and they're going to take the cost down that the consumer doesn't see. But then they're going to leverage the existing production lines of 3 and Y. And I believe, I think I know what they're going to do, but we'll see what happens. I think it's very exciting if this is a play off of the Model Y. It's not, I don't think it's just going to be stripping that's too easy. They're not just going to like strip stuff out. I think you're going to see different size versions of that vehicle, and it's going to be very exciting. And it's a product move to me for the ages. If you take the number one selling car, that industrial design that people obviously love, and say, well, okay, I'm smaller. It's only 2 of us. Maybe I want a smaller version. That could be one of it. Or I have a bigger family. I want something that seats 6 or 7 comfortably. that could be another version of it. And you're using a lot of the same components. And from a leverage perspective, that really helps you. So I hope that's what they're doing. I think that's what they're doing, but I have no inside information, but let's see what happens. But I'm pretty excited about it.
Okay. Thank you so much, Jeff. Appreciate it. Follow Jeff on his X account at the Jeff Lutz. Best account there is. And we're very fortunate for you to continue educating us every Monday. Thanks, Jeff. Bye-bye.
Thanks, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.